A very good evening to all of you. I welcome you to the second session on our Back to Basics GST course today. Friends, today we'll be covering the topic of GST on outward supplies. It's a very important topic because outward supplies is what is the value or is the transaction on which the tax is actually levied. A very good evening to all of you. I welcome you to the second session. I'm sorry for the interruption. So I hope my screen is visible clearly and I am audible to all of you. If there's any issue, just put a message on the chat and I'll try to okay. So today what we'll be covering is primarily the charging section for the levy of GST. We all know the importance of a charging section. If the charging section fails, the levy fails, no tax can be collected from the SSC or from the taxable person. So that is the base or the heart of any taxing statute. While we discuss the charging section, we will identify some important concepts which are an integral part of the charging section. One of them is that there has to be a supply. It is a taxable event for the levy of GST. Like under service tax, we had provision of service, or under VAT, we had sale of goods. For excise, we had manufacture. Same way for GST, we'll identify that the supply is a taxable event. Goods and service again are an important aspect or important part or element of the charging section. When we again go into the concept of supply, the charging section, we'll also find some other important terms which are discussed there, such as business consideration and some concept of deemed supply or deemed classification, deemed exclusion from the concept of from the scope of supply, from the scope of charging section. All of those aspects we'll be covering today on this session. And lastly, we'll also discuss the concept of intrastate versus interstate supply, why the need to determine the nature of supply comes into picture in case of GST. We'll discuss that aspect as well. Without wasting much time, we'll straight away go to the first topic. I hope you are able to, okay, to the first slide for session, the charging section. Under GST, as you all know, we have multiple legislation. One legislation is the CGST Act, the Central Goods and Service Tax Act, which is uniform across the country. The second legislation is the State GST Act, which each state has enacted in their legislature. Correspondingly, we also have Union Territory GST Acts. And the third legislation is the Integrated GST Act. Primarily for our discussion, we'll be focusing on the CGST Act. The provisions under the CGST Act and the respective states SGST Act are similar, worded, and IGST Act borrows a lot of provisions from CGST Act. So CGST Act will be the base of our entire discussion. When I say about the charging section, Section 9 of the CGST Act is the charging section. And it defines when the tax is to be levied. And primarily it has laid down three broad areas where the tax can be levied. The first broad area is a tax on forward charge. As we generally know, the tax that we collect on the service that we provide or on the goods that we supply, like in VAT, service tax. Same way here we have the tax on forward charge. Whatever activities we're doing, the tax on our income, subject to the fact that it sets in the definition. So what is the Section 9 says? Section 9 says that there shall be levied a tax on supply of goods or services or both. This is important. The tax is levied on supply of goods or service or both. Therefore, for the tax to trigger, there needs to be a supply of goods or there needs to be supply of service, or there may be a case where under a supply you are supplying both goods or service. So these elements are very essential. Therefore, we are identifying the first three terms which are important for our discussion. One, there has to be supply. The supply has to be of goods or the supply has to be of service, or there has to be supply of both goods and service. But please note, the tax is not leviable on supply of alcoholic liquor for human consumption because it is outside the purview of GST under the Constitution itself. The states and the center have digress powers to levy tax on the same. Also, the tax on supply of petroleum products such as petroleum crude, high-speed diesel, motor spirit, or as we commonly know it as a petrol, natural gas, and aviation turbine fuel are not brought within the purview of GST Act. They will be brought within the purview of GST from a date to be notified in future. So as of now, there is no GST on petroleum products and alcoholic liquor for human consumption. Except apart from these two, all transactions for supply of goods or services are leviable to GST. So these are the first enabling provision under the charging provision for the levy of GST. The next question comes on what to pay GST. And for that, we have to refer to section 15. The charging section says that the GST has to be paid on the value which is determined under Section 15 of the CGST Act. It is again a provision which is dealing with valuation mechanism, and we will have a separate session which specifically deal with this particular provision. The third basket, at what rate? So Section 9 says that you have to pay at the rate as notified, which may not exceed 20%. So the highest rate of CGST can be 20%. Or under SGST, there is similar provision saying it's a 20% is the upper cap for the rate of goods or services. So we cannot have a effective GST rate exceeding 40%, because on a transaction with 20% being the upper limit for CGST and 20% being the upper limit for SGST. Today we have notified rates predominantly being 5, 12, 18 and 28% under GST, which breaks down to 2.5, 6, 9 and 14% under the CGST Act and the respectively under the SGST Act also. So this is one aspect we have to keep in mind. Then comes the collection mechanism, the provisions for collection of GST. Once the tax is levied, there also has to be a provision for collection. Again, we have a settled proposition from the earlier regime where it was held that, if there's a levy provision, but if the collection mechanism fails, the tax cannot be demanded. The same provisions, therefore, the similar provisions for collection of GST are also there under the current statute. Thus, Section 9(1) says that it shall be collected in such manner as may be prescribed and shall be paid by a taxable person. So here comes the liability. The Section 9 casts the liability to pay tax on supply of goods or services or both on a taxable person. Again, an important term which we'll discuss in some time. This term also has relations with the collection provisions, with the registration provisions, which will again take up in a separate session. But overall, we are going to talk about this particular part, Section 9(1). Some important concepts I'll just reiterate. We have to deal with the supply, what is meant by supply. Goods and services, the definition of those terms. What is the context of using the term goods or service or both? Classification aspect and consideration, the value on which you are going to pay tax. And lastly, what is a taxable person? This is the overall scenario or overall structure of what points we are going to discuss today. Next part of the charging section, if we come, it's Section 9(3) and Section 9(4). They are the levy provisions where liability to pay tax is shifted to the recipient of goods or services and not on the supplier. Again, it's a provision which is brought under the levy itself, under the levy section. Under service tax, we had the reverse charge concept, where by Section 67, the liability to pay tax was shifted in some cases to the recipient, though the levy was under Section 66B. So there's some distinction. Here, the liability to pay tax and the reverse charge is cast on the recipient under the charging section itself. So Section 9(3) says a notified RCM on supplies from suppliers. Notified supplies from suppliers. So like rent-a-cab, or like we have import of services, or we have good GTA service, we have security services and so on. Whenever we receive these services, if they are received, we have to pay tax under the reverse charge mechanism, irrespective of whether the supplier is registered or not. And next, Section 9(4) is cases where notified class of persons are required to pay tax under reverse charge. Like builders are required to pay reverse charge when they purchase goods or services from unregistered developers or unregistered suppliers for their projects. So that is Section 9(4). So there are two different classes of sections or charging sections for RCM. Now, Section 9(4), when I come to, you will note that this is a new provision. At the time of introduction of GST, it was a bit different provision. Here, at the time of introduction of GST, they had said that any supplies that we received from unregistered supplier, if it is a supply of goods or service or both, it was liable to be paid tax at reverse charge. However, due to the uproar created, because of the complexities involved of that provision, the same where, an exemption was granted from making payment of tax with effect from 13th October 2017, which kept on being extended to 30th September 19. In the interim, they amended the provision with effect from 1st Feb 19, and they have said that now only notified class of registered persons shall be liable to pay tax when they receive such supplies from unregistered suppliers. Then we come to Section 9(5). It talks about tax payable by an e-commerce operator. Again, it has a very limited scope, but generally restaurants, aggregators are required to pay tax under this scheme. The aggregators may be in the case in the form of our Swiggy, Zomato, or hotel bookings and so on. This takes me to the supply, the first part which we discussed. What is supply? Now we will note that supply has not been defined per se in the GST Act. The term supply has not been defined, but its scope has been explained. So we do not have an exhaustive definition of supply. Please bear that aspect in mind. So they have just said what is supply, or rather what supply includes. It is meant to be given a wider effect. So for example, section 7.1, which is a general section defining the scope of supply, clause A thereof says supply includes all form of supply, such as there are different sale, transfer, barter, lease, disposal, etc. Different forms of activities, they have said, of goods or services or both, which are made or agreed to be made for a consideration by a person in the course or furtherance of business. So we will find that there are again some subpoints coming here. What have they said? Supply includes all forms of supply. Supply includes all forms of supply, such as sale, transfer, barter, exchange, license, rental, lease, or disposal of goods or services or both, made or agreed to be made for a consideration by a person in the course or furtherance of business. So therefore, when I'm looking at section 7.1, this particular slide, free supplies are not covered in this basket. So anything that you're doing for free for a customer, it is not covered by this basket. So if you're providing free services or you're supplying goods on free basis to your clients, it is not covered by this basket. But please don't make a verdict. There are some other clauses which might need to be looked at before concluding that there's no tax on free supplies. But under this particular clause, it very clearly says that there has to be a consideration. The supply should be in the course or furtherance of business. All supplies made in the course or furtherance of business are liable to GST. For example, I have a business and I have purchased some assets, let's say a motor car, on which when I purchased, there was no input tax credit, but now I'm selling it. Am I required to pay GST on that? Yes, because that supply is in your course or furtherance of business. You have some scrap sale from a business. Again, yes, that is liable to GST. It is in the course or furtherance of a business. Again, the supply has to be for a consideration. I will repeat, it is very important under this clause. And yes, okay. So now we go to the next slide. This is the second clause, clause AA, which has been inserted with retrospective effect from 1st July. This clause seeks to deal with cases where services are provided by an association or society to its members or constituents. So this is an after effect of the Supreme Court decision in the case of Intercontinental, in the case of Calcutta Club Limited, where the Supreme Court had held that in case of mutual associations, where the association and the members are treated as the same legal entity, as same and not different persons, there is no service tax or VAT leviable. Therefore, to counter or to nullify that verdict or the applicability of that verdict in GST, they have come up with this amendment where they have said that any activities or transaction by a person other than an individual, because those activities have to be done, the intent of the law is to tax services by an association or a society, and obviously they cannot be an individual. So therefore, they have said activities or transactions by a person other than an individual to its members or constituents or vice versa for cash, deferred payment, or other valuable consideration. So in that explanation to AA that this is irrespective of whatever verdict has been announced, that mutuality applies to service tax or to GST. So this will nullify, and this with cases of our one of the most favorite topics that we have, taxability of cooperative housing societies, whether GST is payable by cooperative housing societies on collection from their members. This is one of the most common topic when we talk about mutual associations. And this particular clause, which we are looking at the screen, tries to say that yes, and society which is providing service to its members, it is covered by clause AA. It is a supply, the activity carried out by the society for its members is a supply, and they are required to collect GST subject to their crossing the registration limit and so on. So, but the intention is clear that the government wants to tax cooperative such mutual associations. They do not want to exclude it from the purview of GST on the ground, saying that it's a mutual association, that society and members are one, so they cannot provide service. A person cannot provide service to oneself. So they do not want tomorrow of SSC to take that position in the courts. So they very clearly said that it is deemed to be a supply. So you cannot argue that I am one person only, myself and the society, so you don't charge GST. That has been nullified here. Again, when we go back to the other slide, I missed out one point. Here, though it is not been specifically mentioned that there is the supply has to be by a person to another person, but we would believe that this particular clause would again require duality of person. If a person is providing service to self also, it would not covered by section 7.1. This takes me to the third clause of the supply definition or the supply scope, and that is import of service. Here they have said supply includes import of service for a consideration. whether or not in the course or furtherance of business. So as you all know, with the advent of digital and world, there are many cases where we as individuals in our own capacity, not for business purpose, but for our own entertainment purpose, for example, we buy content from foreign service providers. We take subscription from on foreign portals where we can watch movies and all. All those transactions get classified as import of service, and there might be liability to pay GST. Of course, recipients like us who are not in business, the liability is not kept on us. They have kept it on the vendors. They are required to obtain registration and do the needful. But there's a provision specifically. Now, when we say import of service, again, what is import of service? In very quickly, I'll just highlight it. Import of service means the supply of any service where the supplier of service is located outside India, but the place of supply is in India and the recipient of supply is in India. It's a very simple definition. Again, for this, under this definition, it has to be for a consideration. Free services like Facebook. If I am opening an account with Facebook and I use that service of socializing, it is not an import of service because it is not for a consideration. Opening an account with Facebook is not paid, so that will not be covered here. Then we come to the last leg of section 7.1. Activities specified in schedule 1 made or agreed to be made without a consideration. Again, this is very important. What has been done is they have defined 4 or 5 sets of activities or transactions where they have deemed it to be a supply, even though made without a consideration. And we'll just discuss those transactions when we come to that slide. So friends, so far we've discussed the concept of section 7.1 and the 4 wings. Section 7.1a, which is a general rule. 7.1b, a specific rule which was there for mutual associations, societies. 7.1c, again for import of service. B, 7.1b and 7.1c for schedule 1 entries. In all these cases, one thing is clear, is that there has to be a supply of goods or service, and therefore we believe it is important that we first look at what is meant by goods and what is meant by service. This classification is important because under GST, though it was meant to subsume, we have different rate notifications for goods and different rate notifications for service. And at times there's a conflict. It might be important to make sure that we have rightly classified our supply. So let us first look at the definition of goods. So section 252 defines goods to mean every kind of movable property. So first of all, goods has to be a movable property only. You cannot claim immovable property to be a goods, and money and securities are excluded from being goods because our money, our security is our property. It is movable, but they have clearly said it is not goods. And they have again said it includes actionable claim, growing crops, grass, and things which are attached to or forming part of the land, which are agreed to be severed before supply or under a contract of supply. So this is the general meaning of goods, a very common definition which was there also under the earlier regime. We don't see much changes except the fact that actionable claim has been specifically included within the scope of goods. And actionable claim means we all know it includes lottery tickets and all those stuff. So we will discuss that when we come to schedule 3 discussions about when there's an exclusion provided for them from the purview of supply. Service, when we come to the definition of service, it has been very widely defined, very loosely defined rather. It says anything other than goods, money and securities. So when we say anything other than goods, the first thought which comes to our mind is that whether anything and everything under the universe is service, unless it is goods, or do we still have to go back and determine what does service mean? If you will recollect under service text, we had a definition of service. We had an understanding that service means an activity which is done by a person for another for a consideration. So whether that is still required here, because if we don't, then someone might come back to me tomorrow and say that service means anything other than goods. So if I'm going to sell an immovable property, a transfer of immovable property becomes service because it is not a goods. I would believe that no, service cannot be interpreted that loosely. Anything other than goods would still require me to go back and determine whether the essential elements of a contract are present, whether there is an activity which I'm doing for another person for a consideration or not. If it is not there, then it may not be a service. Let me give a classic example which was there also under service tax when negative list was introduced. Under the education guide, they have given an example. A musician who is performing on a street, if he receives some money as alms from some passerbys, that cannot be said to be a consideration for a service provided, because again there is no agreement between the two parties to provide service. It is just an unilateral act by the musician to do that, to play that song or play music, and people who are happy with that performance, they have just given him the alms. There is no binding arrangement. And that principle will continue to apply in the GST also, in my view. Therefore, service, though it is defined very loosely, you still need to go and look back whether there's a valid contract for service or not. The third element which we found in section 7.1 was that the supply of goods or services and the different forms of supply which they refer to, they should be in the course or furtherance of business. It is again very important. What does business mean? Business, they have defined it in a similar manner to what we are under the VAT Act, but they also say that one-off instance of transaction is also a business. But again, when the CBSE circular has clearly said that it is not that wide also. For example, a housewife who is going to sell her jewelry to a jeweler, that cannot be said a supply in the course or furtherance of business, even if the value is more than 20 lakhs. I, in my personal capacity, I own a car. I'm not in the business. And if I just sell that asset, that may not be business. Because all these activities has to fall under clause A. Business includes a trade, commerce, manufacture, profession, vocation, adventure, wager, or any other similar activity, whether or not it is for pecuniary benefit. And any incidental activity to this A is covered in business. But incidental activity itself cannot be said to be a business. So an existence of A is essential for something to be treated as a business. Again, they have tried to capture or bring various other activities within the scope of business, so that the levy section cannot be circumvented. Like in clause E, you will find that provision by a club, association, or society, or any such body of the facilities or benefits to its members. Like cooperative housing society otherwise would have said that we are not carrying out any business activity. But here we have a deeming fiction which says that society is providing facility to its members is a business. So they have tried to cover as much space as possible to make sure that maximum area or maximum class of people are being brought under the purview of GST by even including the definition of business in that manner. This brings me to the fourth term, important term for today's discussion, consideration. What does consideration means? Consideration means getting something for having done some work. When I have done something, I get something in return. That is what consideration is. And the GST law recognizes both types of consideration. One is a monetary consideration, that is payment which is received in the form of money. And second is a non-monetary consideration, payment received in kind, or even barter contracts can get covered here. There are two important exceptions from consideration. If you are receiving any subsidy which is given by the central government or a state government, that is not a part of consideration and you are not required to pay GST. You might be aware that many times government says that if you're supplying, let's say, wheat grains to some specific societies or some specific organizations, the government will give you 20% discount subsidy, or even for fertilizer sale of fertilizers. The subsidy which is coming from government cannot be treated as consideration and no GST is payable on that. And secondly, if you are receiving a deposit in respect of a supply of goods or services or both, it shall not be considered as payment made for such supply unless the supplier accepts such deposit as a consideration for the said supply. Meaning, refundable deposits are not consideration. If you are providing renting of movable property services, then, and if you've taken an upfront deposit for 3 months rent as security deposit, that is not a consideration and you're not required to pay GST on that deposit. Okay. This takes me to the next topic for today, the taxable person, the last term of the 4 or 5 terms which we identified. It is very loosely defined to say a person who is registered or liable to be registered under section 22 or section 24. Sorry. So this is an important, while a short definition, this is very important because by virtue of section 9, it referring that the liability to pay tax is on a taxable person. And the definition of taxable person saying that it is not only the person who is already registered, but also a person who is liable to be registered. Both are covered in the purview of taxable person. So let's take an example. If I am not registered today, but my receipts are more than 20 lakhs. Tomorrow an officer can come back to me and say that, boss, you have received money. You are liable to be registered under GST for supplies made by you, but you are not paid. So please, now you pay the tax as a taxable person, because taxable person includes a person who is registered or liable to be registered. You will note in recent days in the service tax also we had similar notices coming in, wherein based on ITR data, unregistered people, unregistered SSCs have received notices saying that in your income tax return you have shown sale of service of X and Y amount, whereas you are not registered for service tax. So the differential amount is presumed to be towards service provided, and please pay service tax on the same. Many notices have been received I'm sure you would have read about this in your notices, in newspaper also. So please be very careful if you are unregistered or any of your subsidiary companies are unregistered, but there is a slight chance that there is some revenue earned by them, which is crossing the threshold limit of 20 lakh rupees. Please note that there is a liability to be registered. You are not complying in those cases, and there can be challenges in future. The way the data analytics flows today, the data flows between the income tax department and the CBIC is very commendable job by them. But to tap those or identify those cases where people have not obtained registration or have failed to discharge their obligations. So it is likely that in a couple of years, you might soon start notices on those count also, that you have a PAN account of filed or ITR showing sale of service of more than 20 lakh rupees, but your GST returns or shows less than that, or you're not registered. There will be a scope of foreign notice coming to you, inquiry. So please be careful and take necessary action wherever required. Now, we come to Schedule 1. So we discussed Section 7.1, scope of supply, and we saw that there were 4 baskets. Of that, as to what can be treated as a supply. One of them was activities or transactions which are specified in Schedule 1. Now here what has been done is, these are transactions which are deemed to be supply. The Section 7 says that certain activities will be deemed to be supply even if made without consideration. So let's take the first example of permanent transfer or disposal of business assets. At times it might have happened that a company has purchased some asset, but it has become obsolete, or it is damaged, or it's not functioning, and it has to be written off in the books of accounts, or it has to be disposed of. There is no other option available for us. That is deemed to be a supply under GST, and you are required to pay GST. There is a specific provision which has been enacted for valuation of those supplies. We will discuss that when we take ITC provisions. You have to value that supply of asset in such particular manner and pay the applicable GST as it is an outward supply, irrespective of whether you receive the money or not. That is also important. Okay, so let's say that's a write-off. There was a fire, and or let's not say fire because that might not get fixed, or there was some damage, some equipment which you have purchased is not functional, and now you want to dispose it. You are purchased for 10,000, but you are selling it for 100 rupees. You cannot say that I will pay GST on 100 rupees. There's a specific mechanism that you have to follow to determine the tax payable on such transfer or disposal of business asset. Of course, this entry will apply only in those cases where ITC has been waived. So wherever in your books, I'm sure since we have a March ending now, please check with the finance team and see whether there are any write-off of assets during the year. And if there are write-off of assets, first check whether any input tax credit was claimed or not. If ITC has been claimed, go back and see whether any tax has been paid on the disposal of assets or not. There might be a tax liability on that act of writing off of assets. This takes us to the second part, supply of goods or services or both, between related persons or distinct persons when made in the course or furtherance of business. Again, important, there are 2 different terms we are using here. Between related persons means when A limited and B limited, that's a supply of goods or service between the both, and both of them are related parties. That is one particular nature of transaction. And second thing is when A limited Ahmedabad and A limited Mumbai, there is some supply of goods or service between these 2 set of parties, that becomes a supply of second type. Now related persons, both the entities are legal distinct entities. But when it comes to distinct persons, what they have said is they are not distinct entities, but they are branch of the same legal entity. Let's say A limited in Gujarat and A limited in Maharashtra. Independently, they are engaged in supply of goods or services, and both are required to be registered in the respective states. Both branches are required to be registered. And if tomorrow there is any transaction between A limited Gujarat and A limited Maharashtra, that will also constitute a supply. The transaction can be in the form of supply of goods. For example, A limited Mumbai is an importer, and they send some stock on consignment basis to A limited Gujarat. That is deemed to be a supply. Under VAT regime, we had a concept of Form F that is no longer valid. When A limited Maharashtra sends the goods to A limited Gujarat, they have to charge GST. A limited Gujarat can claim the credit. There has to be a tax paid on that transaction. Similarly, there can be services from A limited Gujarat to A limited Maharashtra, or vice versa. Let's take an example. A limited Maharashtra is the head office. and it is handling the entire accounting compliance of A Limited Gujarat or GST compliance. There is a possibility the officer might come back to you and say that A Limited Maharashtra has provided service to A Limited Gujarat. So please value that supply and pay tax on that. There are valuation provisions in place. We will again discuss that in the next session when the valuation topic is taken up by the next speaker. But please note, this is a very important provision. Non-compliance here would have two different issues. One, if you are not complying with this provision, you will have to pay tax from your own pocket. And second implication, the recipient branch will not be able to take ITC if this determination takes place during assessment or department audit. So it is better or safe to actually identify the transactions at day one, pay the tax, claim credit in receiving branch, rather than to wait for department audit. Okay, so please take note of this. If you are not implementing this particular provision in your company, which is a multi-locational company having multiple registrations, please take necessary corrective actions before the department starts those actions. And there can be penalty consequences also when department initiates any recovery proceedings on this account. This brings us to the next part of supply of goods by a principal to agent or agent to principal, where the agent agrees to supply or receive such goods on behalf of the principal. Again, under GST, what used to happen was there was a concept of consignment sale. So when prior to GST, when you had an agent outside Maharashtra, you are in Maharashtra, and you used to send him goods to that location, you used to do it under F form, and the agent used to sell it locally, and the collection process is to come back to you. Same concept continues under GST, but the only thing is that the movement of goods from you to agent has to be under the cover of a tax invoice. You have to pay GST on the upfront amount, which your agent can claim ITC, and when he sells, he will collect, he will offset the ITC and pay the balance to the government. Your rest accounting mechanism, the financial settlement can continue the same manner. Same way, if you have an agent who is buying goods on your behalf, let's say you have an agent in Gujarat who buys material from Gujarat on your behalf. When he buys on your behalf, he will buy the goods on his own account, or it is by giving his GSTI. He will take those input tax credit, and when he sends the goods back to you, you will claim the ITC, which he will charge from you. So be careful if your transactions with your agents that you are complying with this provision. All the goods sent to agents are under the cover of a tax invoice, and the agent is also claiming the ITC. Last part, import of services by a person from a related person or establishment outside India in the course or furtherance of business. Somewhere this is relevant or similar to the second entry of supply of goods or services or both between related person, but this more deals with supply of service between related persons where one of the parties is outside India. Here what happens is, what they're trying to cover is, let's say many times we have MNCs establishing companies in India, and those MNCs carry out a lot of activities for the subsidiary companies also in India. So this particular entry tries to say is that is also a service provided by the foreign company or the MNC foreign holding company to the Indian subsidiary, and that has to be deemed to be an import of service, and tax has to be paid by valuing those service. Again, in most of these cases, you will find that the transactions are revenue neutral in nature. So it is always advisable that we take a conservative view, identify those supplies where we are receiving and pay the applicable taxes and claim the ITC, rather than to wait for department proceedings on this part. So this is what we have in Schedule 1 of the CGST Act. Now, if we go back to Section 7, if you will recollect, or even the charging section, what did the charging section say? It said that the tax was leviable on supply of goods or services or both. Meaning there can be always an issue that a particular supply is that's a supply of goods, or there's a supply of service, or there's a combination where both goods and services are being supplied, or more than one goods are supplied under the same contract, or more than one services are supplied under the same contract. Therefore, we have a concept called Section 7(1)(a), Schedule 2, which deems that certain activities or transactions as supply of goods or a supply of service. And they have given a list of such transactions. If you look at this table, they have identified some transactions, such as, let's take an example, transfer of title in goods, which we generally treat it as a sale of goods. That is deemed to be goods, or that is deemed to be supply of goods under GST. Same way, transfer of right in goods or undivided share in goods without transfer of title. When there's a transfer of goods for, where there's a transfer of right to use any goods, it is deemed to be supply of service. Under prior to GST regime, when we are under VAT, while 46th Amendment, the concept of deemed sales was introduced, and transfer of right to use goods was actually deemed to be sale and subject matter of VAT levy. But under GST, they have deemed it exclusively to be transfer of service, supply of service, and therefore GST is leviable as if you have supplied some service. Same way, lease of building, lease, tenancy, easement, license to occupy land, or lease or renting out of building, both are deemed to be service only. Treatment or process applied to another person's goods is a service. This, in general term, we define it as a job work. Any job work activity is deemed to be service for the purpose of GST. Next, it comes to transfer of business assets. It's a disposal. If you are selling your business asset, it's a sale of goods. But if you are putting your business asset to private use or make it available to anyone else's use, again, it's deemed to be a service. Transfer of business asset when a person ceases to be a taxable person. It is deemed to be a supply of goods unless such business is transferred as a going concern to another person, or the business is carried on by a personal representative who is deemed to be a taxable person. This applies in case when there is succession in business. This list of entries we will see is that some supplies, they are deemed to be supply of services. Under service tax, there is a litigation as to whether a particular activity could be treated as service or not, and therefore to circumvent that or to avoid that litigation, these particular provisions have been enacted. First entry is renting of immobile property. So renting of immobile property is deemed to be supply of service. Why was the need to do that? Because you will observe that under service tax, there is a litigation as to whether the government has a power to levy tax on renting services or not. To circumvent that, they have tried to say that it is deemed to be supply of service. Same way, construction service, we all know there has been a lot of litigation whether the construction activity, builders, the service of builders can be liable to service tax or not. To avoid that litigation, again, they have brought a deeming fiction under the law. Same facts, transfer of permitting the use or enjoyment of intellectual property rights, development of IT software, host of activities relating to IT software, they're deemed to be supply of service. Fifth, agreeing to obligation or to refrain from an act, or to tolerate an act or a situation, or to do an act. A lot of people would have known that there are notices coming regarding notice pay on GST, AARs on notice pay on GST, or canteen recoveries by employers from their employees, whether they are supply. Notices are issued saying that this particular activity, it is covered by this particular activity, and therefore it is liable to GST. Of course, it's a different matter as to whether it's a supply or not in the first place itself, but there are such cases where there's a deeming fiction. You will also note that, this plain reading would indicate that, or the department has actually interpreted the schedule section 7(1)(a) to treat it that, it's a deemed supply of service. But they feel that it's not the section 7(1)(a) does not deem any activity to be supply. It merely deems that the particular supply, a particular activity or transaction, which is actually covered under section 7(1), it deems it to be either a supply of goods or supply of service. It does not create a supply per se. Please note that if something is there in section 7(1)(a), it will apply only first if it is covered under section 7(1), if it is a supply of goods or service or both. Only if your activity or transaction gets covered under section 7(1), then section 7(1)(a) comes into picture. If your activity itself is not covered under section 7(1), your 7(1)(a) will not come into picture. Please note on that. Again, deemed classification, there is one more provision. Works contract services under GST are deemed to be supply of services. Again, works contract services has been defined under section 2(1)(19). It has to be in relation to immobile property only. So not all works contract under GST, under pre-VAT, even non-immobile property related activities were deemed to be works contract. That will not apply under GST. For here, we have works contract only in relation to immobile property. Only those activities are deemed to be services. Similarly, restaurant service, supply by way of or as part of any service or in any other manner whatsoever of goods being food or any other article for human consumption or any drink. So in short or ago, we can say restaurant services, they are deemed to be supply of service. Again, in VAT regime and service tax regime, there is sort of dispute. Is it supply of goods? Is it supply of service? And the dispute is still, I think, pending before the Supreme Court also. So we will have to wait for that. But here under service tax, under GST, the position is very clear. Restaurant service or the service activity of supply of food is deemed to be supply of service. It will also cover outdoor catering, banquet halls, and everything here. This takes me to section 7(2) of the CGST Act. What does section 7(2) says? That irrespective of what is there in section 7(1) and section 7(1)(a), activities or transactions which are listed in section 7(2), shall be deemed to be neither supply of goods nor supply of service. So even if something gets covered under supply by virtue of section 7.1, the government has then excluded it from the scope of supply by virtue of section 7.2, read with schedule 3 of the CGST Act. The first entry is service by an employee to the employer in course of or in relation to his employment. When an employee provides any service to the employer, the same is excluded from the purview of GST. Such as an example of this would be notice period recovery. If an employee says that I will not serve my notice period and you recover the money from me, though the amounts are recovered from the employee, the money is received by the employer, even that arrangement gets covered by this particular transaction, and that will be outside the purview of GST. Second, services by court or tribunal established under any law for the time being in force. When we pay any appeal filing fees in IT, AT or state, you are not required to pay GST on that. Third part is very not applicable to most of us. Fourth, services of funeral, burial, crematorium or mortuary, including transportation of the deceased, they are not to be treated as supply of goods or services, and there is no GST liability on the same. Fourth, sale of land and movable property, it is not liable to GST and subject to 5B of Schedule 2, sale of building. So sale of building under a Schedule 2 says construction activity up to the receipt of OC or first occupation. So in cases where the construction is completed, OC is received. In those cases, those and sale of those building and those building is sold, or a unit in such building is sold, that is not supply of goods or service for the purpose of GST and are not required to pay the same. Actionable claims, if you recollect, we had discussed the definition of goods. The actionable claims are specifically excluded in the scope of goods, but here they're excluded, and by virtue of section 7 schedule 3, again they're excluded from the scope of supply, but with an exception. Lottery, betting and gambling are liable to GST. The activity of lottery, betting and gambling is liable to GST. All other class of actionable claims, they will not be treated as supply. Again, the last 3 columns are very important. The last 3 points: sale of goods from a place in the non-taxable territory to another place in the non-taxable territory without such goods entering into India. The merchant trade transactions, which is generally known in the business parlance. For example, goods coming from China and are shipped directly to USA. Goods don't come into India. Only the selling parties in India is there liable to pay GST. There was a huge controversy at the time of introduction of GST, and that controversy and the uproar resulted in the government amending the provisions, inserting this particular entry in Schedule 3. Unfortunately, it is prospectively amended, and for some period we have an open issue. There can be notices. Of course, it can be defended. For first ground being lack of citers on that point itself. Again, the next part: supply of warehoused goods to any person before clearance for home consumption. At times, importers have an option to not clear the goods for warehousing for home consumption, but rather file the bill of entry for warehousing. The goods are kept in customs warehouse, and while the goods are in customs warehouse, the importers can sell the goods to a third party in domestic tariff area or in India. In such cases, there is no GST liability, because bill of entry for home consumption will be filed by his buyer, and at the time of filing this bill of entry for home consumption, he will be anyways paying GST. So there's an exemption to that also. Last, again, a controversial area from GST regime, from VAT regime, HISIS saves taxability. Same provision: supply of goods by the consignee, that is an Indian importer, the first Indian importer, to any other person by endorsement of document of title to the goods after the goods have been dispatched from the foreign port, from the port of origin located outside India, but before clearance for home consumption. So only the one benefit, that even the goods are not in HISIS, that is, the goods have entered Indian waters, or the ship has reached the port, and the goods are in the process of loading, unloading, and you sell those goods, it is eligible for this benefit. It is not a supply, and you are not required to pay GST as a supplier. Of course, your recipient will have to pay the GST when he files the bill of entry for home consumption. Now, coming to the next part, classification, again important. Why? Because as we discussed, there are the GST is levied on supply of goods or service or both. But any transaction can be deemed to be, can be treated either as a transaction of supply of goods or as a transaction of supply of service. It cannot be both. Why? Because there is a single concept, or there are different rate notifications we have under GST. One is for goods and one is for service. So we cannot say that for same transaction a goods notification also applies and a service notification also applies. Therefore, the concept of classifications, composite versus mixed supply comes into picture. Section 8 says that it deals that the taxability of it deals with the taxability of such supplies. Composite supply means what, and mixed supply means what. So generally, the belief or the understanding is that there is a bundle of service. Only difference between composite and mixed supply would be that in case of composite supply, there is a natural bundle of service, whereas in case of mixed supply, it's an artificial bundle. Let me give you an example of composite supply. Even the definition under the CGST Act gives that it says when I'm buying some goods and the supplier, my supplier or my seller tells me that I will supply the goods to your location, so you will have to pay me market value of goods or the price of goods and transportation charges. This is the case of artificial bundle. Whereas this is the case of natural bundle. I stand corrected. This is a case of natural bundle. Whereas what is an artificial bundle? I go to a market, the supplier has created a assortment of different products. Like let's say he's kept some pens, some chocolates, some equipments, and he's giving all of that as a single combo. That becomes an artificial bundle because those goods are not something which are generally sold in conjunction to each other. If you refer the definition, composite supply says that such goods or services should be supplied in conjunction with each other. Whereas mixed supply says such goods or services, those sold together, are generally not supplied in conjunction with each other. So you have to be very careful how you determine whether your supply is composite supply or mixed supply. I will again repeat, this comes into picture. The provisions of classification will come into picture only when you have more than one goods or services being supplied under the same contract. Are we clear? So what is the tax liability? So for example, for composite supply, they have said that when the principal supply shall be treated as a main supply. So when I have more than one supply in a contract, and if it's a composite supply, the principal supply will be the main supply. For example, I'll go back to my earlier example of service of supply of goods along with transportation. There, the principal supply was supply of goods, and therefore transportation is an incidental activity. Entire consideration will partake the character of supply of goods, and GST will be levied at the rate which is applicable to the supply of goods. So let's take an example. I'm buying some books which attract nil rate of tax, and the books are worth 10 lakh rupees, and the transportation cost is 50,000. The vendor cannot say that I will charge 10 lakh is 0% and 50,000 is at 5% or 18%. No, 10 lakh 50,000 is nil rated. There will be no GST on that. Same way, on the contrary, 10 lakh is the value of goods. They are liable to tax at 18%, but the transportation at 12%. The supplier cannot have an option to say that 10 lakhs at 18% and 50,000 at 12%. It's a single price. Everything will be at 18% only. Same way for mixed supply, they have said that in case of mixed supply, means that there's an artificial bundle. The entire transaction will be taxed at the highest tax rate which is applicable on the goods or services being supplied. Let's say you're supplying 3 products, one at 5%, second at 12%, and third at 28%. In that case, your entire consideration will be taxed at 28%. Of course, in both these cases, the important condition is that there has to be a single price for the contract. If separate prices are involved, let's say if I'm supplying 5 different parts or 5 different goods, but I have available with me the price of each of those products, I can apply the respective price and not the higher rate. Then this principle will not come into picture. This applicability of composite and mixed supply requires that there has to be more than one goods or service being supplied, and separate price is being identified for each goods and each class of services which are to be supplied. That is very important. Now we come to the next and the last aspect of our today's discussion. That is the nature of supply. Very important. Why? Because as I told you, there are multiple legislations under GST. We have CGST Act and SGST Act, and we have IGST Act. Now CGST and SGST Act applies when we have an intrastate supply, whereas IGST Act applies when we have an interstate supply. So we need to determine when a supply is an intrastate supply and when a supply is an interstate supply. So intrastate supply, the general rule is that the location of supplier and place of supply should be in the same state. It's an intrastate supply. And if the location of supplier and the place of supply is in different states, it will be deemed to be an interstate supply. Okay, so let's say when I'm moving, I am in Maharashtra, I'm in Mumbai, that is my location of supplier is in Mumbai, and I'm supplying goods to someone in Mumbai only. The POS is Mumbai, the place of supply is Mumbai. It's an intrastate supply, and I have to charge CGST and SGST. An example of such interstate supply is also there. For POS, there's a specific set of rules which are being defined for determining place of supply for goods and place of supply for service. A separate session will be held for that particular topic also. So you will have to look into that aspect. Interstate supply. While we also have general rules, some transactions are deemed to be interstate under GST. One of them is supply of goods imported into the territory of India till they cross the customs frontier of India shall be treated to be supply of goods in the course of interstate trade of commerce. Therefore, all the transactions of import of goods are deemed to be interstate transactions, and the tax is also levied on them under the IGST when we create the bill of entry. Supply of services imported into the territory of India shall be treated to be a supply of service in the course of interstate trade or commerce. This is one more deeming fiction. They deem certain supplies to be interstate. Third, where supplier of service is located in India and the place of supply is outside India, it is deemed to be an interstate supply. Fourth, supplies to or by SEZ, developer or unit are again deemed to be interstate supply. If you are in Maharashtra, you have a client in Maharashtra who is in SEZ, who is either an SEZ developer or an SEZ unit. Even if they're in the same state, still it is deemed to an interstate supply. And when you supply goods to your SEZ client, you have to charge IGST. Though he is in the same state, it is liable to IGST and not CGST and SGST. Last, supplies in the taxable territory, which are not an intrastate supply and is not called anywhere else, they are deemed to be an interstate supply. This is all from my side. I will open the forum now for queries from all of your end. I will unmute you all so that if we have any queries, we will take those up at this point of time. You can unmute yourselves and ask the query one by one. Okay, I think there are not much queries. So I thank you all for a patient hearing. We will connect again next week on Tuesday when we have a session by Yash Parmar. He will again be dealing with GST on outward supplies, but the valuation aspect and the time of supply aspect, the point of taxation aspect of the GST. We have one query from Raj Dabolkar. With the recent Supreme Court decision whether GST payable on ocean freight, answer would be no, since the Supreme Court has struck down the notification requiring an importer to pay tax on reverse charge. You may stop paying GST under reverse charge on ocean freight. That will apply only in case of CIF contracts. If you are paying to a transporter who is outside India for that services, you will be liable to pay tax under reverse charge mechanism. Any other query? Okay, we'll wind up for today. Thank you for a patient hearing, and I look forward to see you all again next week on 31st May. Thank you very much.